What's up, you guys? So recently, I'm sure you've seen the markets taking a bit of a dive. The S&P 500 has dropped 20% from its previous high, making it a bear territory. Now, this is a stark difference than what the markets were doing during the pandemic, when interest rates were high and stimulus was being given out. Now, if you've been putting off getting into the market, this may be the time to take the opportunity to dip your toes. Starting sooner is better than starting out later and having to save more. Stocks are a great way to build wealth as they appreciate over time if you choose right. Now, here are the 4 ways new investors can make money in the coming bear market, or should I say, the current bear market. One is to take advantage of the low stock prices. Now, it is highly advised by experts to not try to time the market, but rather to look for undervalued stocks of value. Currently, the markets have much decline and plenty of undervalued stocks. See this as a discount sale of your favorite items. It is the time to buy, not to sell. Some stocks recommended by experts include index funds or ETFs for a more safer investment. So those are some that you can think about. 2 is dollar cost averaging your stocks. Basically, dollar cost averaging means to invest a certain amount of money in regular intervals. This is highly important in volatile markets. You don't want to be left out when another opportunity comes in the market. For example, say you have $5,000, you would invest $500 every other week or whichever interval you choose until it's all invested. In this case, you would try to avoid constantly timing the market, which typically has a very high failure rate. 3. Put a long-term investing plan in place. You should reflect on what your financial goals are and what you want to invest in, whether it is stocks, bonds, commodities. You should diversify and plan ahead on how to allocate your funds. Some things to plan out are where you want to invest, how long do I want to be in the market, what will I do in a highly volatile time, how much do I want to risk? These are some of the questions you want to ask yourself for a better long-term plan. 4, last but not least, develop good investing habits. During these times of inflation and uncertainty, you must develop good investing habits to keep you on track. Keeping emotion out of your investing journey is key to success in the markets. You will see the value of your portfolio fall, and in these times, you must stick to your investing strategy and not become rash. The long-term goal will be much better off than the short term. Now, that is it. I'm keeping it simple and short. That will be it for this video. And any other topics you guys want me to cover, please let me know.